Hello everyone. In today's video, we will talk about the Trendline strategy, which is the most powerful strategy you may see these days. In this strategy, we will talk about how to draw a trend line, how to reposition it, and how to get rid of the fake breakout to make a huge profit and trade comfortably without stresses. These green lines that you see here are called the downtrend. They are drawn from top to bottom in order to determine the breakout and to enter into buying positions. As you can see, there are many of them, and each line represents a successful trade that has been placed according to certain conditions that can be applied quite simply. Well, to learn more about this strategy, let's go back from the beginning by opening a blank chart that contains nothing. When we try to draw a trend line, we may draw it in several ways. Sometimes we may draw it like this, and when a breakout happens, we say yes, it is time to buy, and when the candles come back down, we say yes, it was a fake breakout. Then, we look for a way to draw another trend line, and another until we stuck to the fake breakout several times. To get rid of this suffering, in determining the real breakout, let's delete these lines, and let's start from here, from the time frame. This strategy works well with 1 hour frame, and it can also be used even on 5-minute and 15-minute frame, but for high accuracy and comfort in trading, it is recommended to use it on 1 hour frame. After choosing the time frame, open the indicators box, search for the Bollinger Bands indicator, and choose the one under the technical section, as you can see here. As for its settings, leave it at the default settings and do not change anything. And this is all we need from trading indicators. Now let's start with the rules. But let's hide the Bollinger Bands indicator for a bit. Well, the first rule is to see that the trend has changed direction to form a new high, and this is what happens all the time. Here, the trend was moving up and then changing its direction to the bottom and forming a new high. Here too, the trend was moving up and then changing its direction to the bottom and forming another top. And here, we see that the trend was heading up, then stopped rising and headed down to make a new top. Well, this is what happens constantly on the chart, so we will benefit from these movements by finding the appropriate point at which the movement changes. Let's go back to where we started and activate the Bollinger Bands indicator so that we know the second rule. Well, rule number 2, as the trend begins to head down, we should see some candle wicks that have crossed the upper band, as we see here, and also here. And all these wicks that have crossed the upper band are called higher high, which are indicators, and we will use it to draw trend lines with the highest accuracy. Well, let's say we were trading somewhere here, and we were looking for a breakout. Since we have 2 candle wicks that have crossed the upper band, and since the trend is heading downwards, we will draw a trend line according to these wicks. Now we connect the wicks of the candles, and logically, we start at the top and then pull it down. And after drawing the trend line correctly as we did, we will wait for the breakout to appear. Here there was no breakout, but the rebound happened right on the line, so let's move on and see what happens. Now at this candle, the breakout has been confirmed. But wait, is that true? Is the breakout really confirmed? In general, yes, the breakout happened, but how do we know that it is a real breakout and not a fake one? Well, to know this, we have to compare it with the last higher high, which is this candle here, and as we said, all the candles that cross the upper band with a part of its wick and then come back down are considered higher high candles. As for the candles or the wicks that touch or cross the middle band and then back down, they are called lower high candles. Well, the name is not for the candles in themselves, but for their movement, but we say this for simplicity. As we said, we compare the breakout candle with the last higher high candle by using the horizontal line. We place it on the last higher high candle so that it will represent the last resistance area near the trend line and the breakout, and if it is breached, the breakout will be confirmed and the winning rate will be very high and sometimes more than you can imagine. But in the event of a rebound, we will not lose anything and we will know that we have eliminated a fake breakout. Let's run and see what happens. Here we notice that the candles are starting to bounce down. We also see a red candle wick has crossed the white line, and this does not mean anything unless we see a green candle closing above this line. As we see, there are many attempts, but the resistance seems to be fierce here. And finally, as we can see, the breakout has collapsed, which means it was a fake breakout. I repeat, all the wicks you see here do not mean anything but resistance. Unless we see a green candle that is closed above the white line, the breakout is not confirmed. Well, let's run again and see what happens in the next candles. Let's stop for a moment. Here we notice the emergence of the candle wick above the upper band, so we have a new top, or as we call it, new higher high. All we have to do now is wait for a new high to appear, so we can draw another trend line. Here we see that the candles touch the upper band, but is it considered a new top? Of course not. These candles must return to the bottom and touch the lower band or get very close to it. Once again, the candles touch the upper band, but as we said, they must return to the bottom to confirm the top. Now we see that the candles came back down under the middle band and almost touched the lower band, so we can say that we have a new high. And since we have two highs, we can now draw the trend. All we have to do is wait for the breakout to occur and then apply the conditions that we talked about earlier. This is exactly where Bitcoin stands when recording this video, so we'll wait for the breakout, but at this time, let's go back to see other examples. But before that, let me tell you another very important thing. Why are these candles considered to be higher high candles? First, as we said, because these candles crossed the upper band, and secondly, because they came back down and touched the lower band. But what about those candles? They also touched the upper band. Well, these candles did not come back down to touch the lower band, they did not even come close to it, so they are not considered higher high candles and cannot be used to draw a trend line in this strategy. Well, let's go back to the chart and see another example. Here we see that the trend was heading up and then changed its direction to move downwards, which formed a top as we see here. And this means that the first rule has been found. And always make sure that the top comes back down and touches the lower band, as we see here. The second rule is to find another top with a lower price than the first. Finding two tops may be enough, but it depends on where you enter. When you open the chart, you may find that the candles have reached here, or they may have been here. That would be fine, as long as you found two tops earlier. Okay, let's continue to find the rest of the tops in this downtrend and mark them with a circle. Now that we've found them all, let's draw a trend line. We start drawing from top to bottom, and the most important thing is to pass on the first and second tops. Now let's use the replay tool to see the breakout clearly. As we can see here, the breakout occurred, and when this candle was closed with a full body above the trend, the breakout is confirmed. All we have to do now is the final confirmation of this breakout by placing a horizontal line above the last top we identified earlier. And since we see that the breakout candle is above the level of the white line, we enter into a buy position. Let's see another example before we start explaining take profit and stop loss in this strategy. Here we see the first condition, which is an uptrend followed by a downtrend. And logically, this movement formed a new top or new high. Now let's check the other tops, and as we said, even two tops are enough to draw this kind of trend. I draw this small line here to show you that the first top came back down and touched the lower band. Well, let's mark the second top as well. Here too, we find another top, but there is no need to mark it when drawing the trend. As we said, we may have been trading here or here and even before it appeared. For this, relying on two tops makes trading easier with more opportunities. So let's draw the trend line according to these two tops. Here we see the emergence of the breakout, but as we said, this breakout should always be confirmed by the last top below the trend line. As we can see, these are the last two tops below the trend line, so which one should we use? Of course we will use the last one, and it does not matter what level has reached in price, as long as it is a top and located below the trend line. Well, here we see a breakout candle, and here, we see the confirmation candle. As for the entry, it should be at the first completed green candle above the white line. In another language, when the first green candle has closed above the white line, we enter. Let's see another example that might be a little important. Here we see the pump and dump, and this is not considered a change in the trend direction. But here, we see that the trend is moving up and then changing its direction down, forming a new top. So we will look for the following tops, and as I have said many times, even two tops are enough to draw this type of trend. We draw as we explained previously, from top to bottom, while trying to respect the positions of the previous tops. But here, as you can see, the breakout happened. But is it a real breakout or a fake one? To find out, we need to find the last top below the trend line, which is this top right here. To make sure that it is really a top, we see that it touches the upper band and then returns to the bottom to touch the lower band. And after confirming it, we draw a horizontal line over it, as we did in the previous examples. As we see, this breakout was also a fake one, and it was easily eliminated. Since this movement here is a pumping and dumping movement, as it did not cross the trend line much, the case remains as it is, and the trend line remains in place until another breakout appears. And as usual, when the breakout appears, we search for the last higher high candle. When we find it, we put a horizontal line over it. Finally, we check the candles that cross the green trend line, are they above or below the white line as well? If they are below it, we wait for it to break it, and if it is above it, we enter directly at the first green candle. And the result will be a significant rise in the trend. Now let's talk about take profit and stop loss in this strategy. And let's suppose we entered here at this breakout candle. In this case, the stop loss should be placed at the lower band because the lower and upper bands are very close to each other. As for the risk-reward ratio, it should be 1 to 2, in other words, the take profit is twice the stop loss. Let's see another example. Here we see that the lower band and the upper band are far from each other, so we will place the stop loss in another way. Let's say we entered at this breakout candle. In this case, the stop loss will be between the upper and lower bands, meaning slightly below the middle band. As for take the profit will be the same, in the ratio of 1 to 2. Finally, can this strategy be used to enter short positions? Although I do not recommend using it in shorts, but yes, this is still possible, by reversing the rules. For example, here, we found a bottom or a lower low, instead of finding a top. Next, we search and mark all the bottoms that exceed the lower band. But not this one, because it didn't even touch the lower band. Also, this weird candle can be marked as long as it meets the conditions. Then, draw the trend line according to these candles. But is this correct? Can we draw the trend above the candles? No, this is not correct. The candle's positions between the two lows or the two tops should always coincide with the trend line. So, we will check the next low. And we will put the trend line under it. Now when you see the previous candles, you will find that they are in great line with the current trendline position. Now we do what we always do, which is to wait for the breakout, and if it occurs, we look for the last bottom above the trend line and draw a horizontal line below it, and then we wait for the confirmation. And when we get confirmation by breaking the white line down, we enter a sell position. You can also add an alert on the trend line by right-clicking on it and choosing the type of alert you want. We can also add it to the horizontal line using the same way. Finally, to get one powerful strategy that you can use for the rest of your life, add the pullback magnetic system to this one, and you will increase the number of trades very dramatically, and I believe that you will never need any other strategies or any other indicators after you master it well. I know it may be a little difficult to understand, but I think it is time to learn the difficult so that you can move on to the next level and even beyond. Thanks for watching, and don't forget to subscribe. Good luck.